Hello, this is Carlos Asilis from Glovista Investments, here to share a market outlook for the week of June the 28th. First, a brief recap on this past week's major macro and market developments. At the macro level, the activity calendar continues to confirm our ongoing thesis of activity momentum leadership rotation away from the US to the rest of the world. For example, the overriding majority of US economic releases surprised to the downside versus consensus estimates this past week, including the University of Michigan Sentiment, Chicago Fed National Activity Index, Market Services Index, as well as new home sales as durable good orders. Conversely, out of the Eurozone in particular, a number of economic releases, the overriding majority of them surprised to the upside. This includes the German IFO survey, Eurozone Markit PMI, Taiwan industrial production out of Asia Pacific, Singapore industrial production, as well as the German consumer confidence indicator. Within the price domain, this past week's calendar was benign, particularly the release of the May US core PCE deflator came out slightly below consensus estimates, which of course, along with the benign activity releases outside the US, combined to bring about a decline in equity and bond market volatility metrics. From an asset flows perspective, this past week's release of the Fed's stress test results on the banking system was also benign, fueling expectations of imminent announcements by large banking institutions in terms of share buybacks and increased dividend payouts. Moving along the market domain, the calendar also was supportive. Risk indices edged higher this past week, led by value sector stocks. The S&P Value Index rose by 3.2% for the week, trumping their growth peers, which rose by 2.3%. Outside the US, emerging markets rallied by about 1.4%, and non-US developed equities rose by 1.5%. The dollar was approximately flat for the week, declining 40 basis points. As we look ahead, our investment thesis remains unchanged. We continue to favor value-oriented sectors and stocks globally, including emerging market equities, along with value sectors in the US and Europe, including energy, materials, and financials. We also continue to favor high-quality secular growth stocks out of the US. The calendar for the incoming week is somewhat heavy. Out of the US, it includes the release of June employment report, the Dallas Fed Manufacturing Conference Board Consumer Confidence. Out of Europe, we have a scheduled release of German employment figures, Eurozone CPI, German CPI. Out of the Asia Pacific region, we have the scheduled release of the second quarter Tankan survey out of Japan, and a number of China PMI releases. Thank you for your time and have a good week.